Welcome to RJ Explain Money. Please note, this content is for educational purpose only. We provide news and facts and not financial advice. Always do your own research and consult a professional before making any investment decision. Let's check on today's market story. Indian equity took a break after a 8 continuous winning session as the investor turned cautious ahead of the crucial Federal Reserve meeting this week. Now we will look into the key market movement. The Sensex is down by 0.15% and Nifty 50 is down by 0.18%. Rupee gained by 6 paisa and gold declined by 0.33%. Let's check on the positive news and its impact for today. The realty sector surged on the rate cut hopes. The Nifty Realty Index emerged as a day star performer, surging like 2.45%, its biggest intraday gain in 3 months. All 10 constituents closed higher as an investor positioned for the potential US Fed rate cut that could lead to a similar easing by the RBI. The key beneficiary of this are DLF, Lodha Developer, Prestige Estates led the rally. And the top beneficiary of the rally is Embassy Development, jumped by 7.32% after reversing a 2-day decline. Index reached 908 level, highest in the 13 sessions. The catalyst for it is the growing expectation of US Fed rate cut on September 17, which could trigger a RBI policy easing benefiting a interest-sensitive real estate sector. Next on the positive news, we have the financial service. The financial service shine. Geo Financial Service topped a Nifty gainer with 1.16% rise, while Bajaj Finance surged by 1.48%. Last week also we saw Bajaj Finance surged more than 3% and it's continuing its gaining streak. The banking sector showed resilience with the Nifty banking gaining by 0.26%. Next we will look into the defense and the infrastructure, which showed a gaining momentum today. The defense and capital goods sector found a support after a defense minister approved new Defence Procurement Manual (DPM) covering a revenue procurement worth 1 trillion in a financial year 2026. On the DPM, we have the following: relaxed penalty, no damages in the prototype stage, lighter penalty after, assured orders, guaranteed orders for 5 years, ensuring the stability. And third is empowered decision making. Financial authorities at the field level can now make a quicker decision, cutting down on the red tapes. Next, key stocks to be highlighted on the digital transformation and the infrastructures are RailTel Corporation. The company stock jumped by 6.5% after it secured a significant order worth 210 crores from the Bihar Educational Project Council. This order is part of the PM Shri scheme, involves providing a digital infrastructure. The L&T is up by 0.53 on the infrastructure optimism, and the Ultratech Cement gained by 0.69 on the construction demand. Next we will check on the negative news and its impact. IT sector is under the pressure. Nifty IT index was the day biggest drag, falling by 0.59% as all 10 constituents traded in red. Investors remain cautious ahead of the US Fed decision on the rate cut. The Infosys is down by 1% despite 18,000 crore buyback approval. TCS is down by 1.1% on the Fed uncertainty, and the Tech Mahindra also declined amid a sector weakness. The reason is due to the political development and the ongoing tariff concern affecting the US tech spending outlook. Next, the auto sector faces a headwind. Auto sector declined by 0.3 to 0.6% with a major player under pressure. M&M declined by 1.3% and the HM Motor fall by 0.92%. Paint industry struggle continues. Asian Paint led the loser, declining by 1.46%. The company continues facing intense competition from the new entrant like Birla Opus, which has grabbed 7% market share in just 1 year. And the key challenges for the Asian Paint is the market share erosion from the 59% to 52%. This 7% lose had went into the new entrant Birla Opus. The weak demand condition and the increased competitive intensity from both existing and the new players. We will look into the pharma sector weakness. The Dr. Reddy Lab dropped 1.25%, while the broader pharma index declined by 0.4%. The sector faced a profit booking after the recent gains. Next, we will look into the global market. The global market is mid-set ahead of the Fed meeting. We already saw yesterday. We'll provide you the short recap of the US market. Dow Jones is down by 0.59%, S&P 500 is down by 0.05%, and Nasdaq marginally gained by 0.01%. The reason is due to the mixed sentiment, and there are 96% probability of 25 BPS Fed cut expected on the September 17. And on the Asian market, Nike 225 closed for holiday today, and Hang Seng gained marginally by 0.2% despite a weak China economy data. And on China economy data, the industrial output is 5.2% and the retail sale is only 3.4% on the year-on-year growth. Let's check on the key calendar dates and events. The Federal Reserve meeting to be held on September 16 to 17. It is one of the most critical event. The FOMC meeting expected to deliver the first rate cut of 2025, and the market expectation is a 96% probability of 25 BPS cut. So the Fed rate cut will come down to 4 to 4.25%, and the 4% chances of 50 BPS cut. And Powell's guidance on future easing cycle is also crucial, and this will have a direct impact to our RBI policy easing, benefiting a rate sensitive sector like realty, auto and banking. Next, on Tuesday we will be receiving the US retail sales data, and the expectation is strong at 0.7%. Next we will check on the China US trade talk, and today is the second day of high stake discussion in Madrid between the Treasury Secretary Scott Bessent and the Chinese Vice Premier He Lifeng. And the key issue to be discussed on the today's China-US trade talk is talk about selling or separating a TikTok US business, tariff on China oil purchase from Russia, broader trade relationship reset. Apart from above, on the Indian market, the upcoming RBI meeting is scheduled for September 29 to 30 and October 1. The Fed decision likely to influence the RBI stance on the rate cut. And adding to that, multiple companies will be announcing a Q2 result this week, providing an insight into the corporate performance amid global uncertainties. At last, I will close this video with the 3 takeaway and 3 key risks. Top 3 takeaway for today are Fed decision on September 17 will be the key catalyst for the global market direction, with the 25 BPS cut almost certain. Realty sector positions strongly for the rate cut benefit, while the IT sector faces a near-term headwind from the political uncertainties. Rupee's strength and the China economy weakness create a favorable condition for the India's relative outperformance. Next, following should be on your risk checklist. US political development affecting the Fed governor appointment could create additional uncertainty. Tariff escalation between US and China may impact global trade and IT sector revenues. Oil price volatility due to the geopolitical tension could affect the India's import bill and the inflation. Thanks for watching the video. If you found this briefing helpful, smash the like button, share it with a fellow investor, and don't forget to subscribe. I am always open to the feedback. Please provide your valuable feedback in the comment. Thank you.